Hey everyone, my name is Daniel and welcome back to another video. I hope all of you are having a great day out there. As always, here today, we need to talk because my second biggest position in my stock market portfolio just went up over 25%, closer to 30% in just the past 5 trading days. So in this video, we got to talk about exactly what this company is, what just happened to warrant such a massive move to the upside, exactly what's going on at this company from a long-term perspective, and exactly what I'm doing with my overall portfolio allocation and my thoughts on this company over the long run. So if you end up enjoying this video and potentially end up finding some value in it, please consider subscribing. And with that out of the way, let's get into the video here. So without further ado, let's go through exactly what this company is. Well, it's the Tattooed Chef, ticker symbol TTCF, a company that I've been talking about for, roughly the past year, I want to say, ever since I started making videos. I've been talking about the Tattooed Chef. I've been watching this stock, before its not IPO, but pre-SPAC days. It did merge with a special acquisition corp, like a lot of companies out there. But when you look at the Tattooed Chef here, it's up over 25% in just the past 5 trading days. If you want more of an exact number here, on August 19th, the stock bottomed out just under $16 per share. Now trading, just over 20 bucks. We don't have much information here on the post-market trading action, but just over 20 bucks here today. Roughly a 28% move to the upside here in just the past 5 trading days. So let's go through exactly what happened. And although this move may look absolutely phenomenal, all you got to do is zoom out to a 1-month view to see what's happened. And we can see that the Tattooed Chef experienced a massive decline in its stock price from roughly mid-August, August 10th to August 18th. That 1-week span, the stock saw a drop of right around, let's see here, 27% in the span of right around a week. A massive move down. Now, why is this? Well, the company reported earnings, and earnings were below expectations on both revenues and profits. And by the way, if you don't know what the Tattooed Chef is, they're basically a food company revolutionizing the industry by going in with more of a plant-based food approach, focusing in on different plant-based meats, plant-based meals, really incorporating that within their products, and focusing in on the millennial generation by making food that is easy to make, currently focusing on frozen foods. They will expand beyond that over the coming years here, but foods that's easy to make, rather healthy, relatively good pricing, but either way, it's healthy food, easy to make, things like that millennials favor overall. You can take a look at more of their products. They are in the United States and pretty much every single, Costco, Sam's Club, Walmart, Target, etc. Target actually said that, their kind of launch within Target has been the most successful frozen food launch in the history of Target as a company. So obviously the product selling. What happened here to cause this massive decline in its stock price? Well, you see, branded sales increased 62%. You got to keep in mind the Tattooed Chef. They used to be a private label company. Again, they'd sell food to something like Kirkland, which would slap their brand name on it, Kirkland Foods, like in Costco. And although it is a Tattooed Chef product, they'd sell that to Kirkland, to Costco, which would then sell it up at a bit of a marked up price. So that was kind of their previous private label business, but they've really shifted a lot to branded sales over the past couple of years here, which now make up, again, a large majority of their revenue, roughly 65%. And as we know, private label, the margins on that are very small. So over time, you're going to have a tailwind here of margin improvement, given branded sales increasing as a percentage of revenue. Either way, with that out of the way, let's go through what happened. Well, when we look at 2021 outlook and their actual guidance for the year, regardless of what we saw, nothing changed when it comes to their actual revenue expectations and profit expectations. Nothing changed on that front for their full year 2021 guidance, nor did it change for the long run. So when I looked at this earnings report, all I saw was short-term negativity. Why? Because the company missed on both revenues and profits. Revenues slightly missed on that. I think they were expecting right around 52 million. They came in at 50.7 million. Still a 46% increase, massive growth on that front. Gross profit right around 8 million, 15.7% gross margins, which again, that will improve over time. Keep in mind, roughly 40% of their revenue still comes from private label, which is, significantly lower margins. Either way, let's keep going here. You see a net loss of $53.2 million, a massive loss on the bottom line. Everyone freaked out and the stock dropped. This is, from my understanding, the main reason as to why the Tattooed Chef experienced such a significant decline in just 1 week. capital expenditures, their net loss. Now, beyond this, you got to understand that roughly $46 million of this, half $100 million net loss was a one-time expense from their acquisitions of New Mexico Foods. I think that is the name of it. Foods of New Mexico in May, a company that will, again, allow them to expand into the Mexican and potentially, South American type of food, that kind of area. I hope I'm kind of saying that right. But either way, they acquired this company for around $40 million in cash. It'll allow them to do, right around $200 million in revenue from those two facilities. One is a tortilla factory. Another one is, again, a Latin American food. But either way, this one acquisition that they did for roughly $30 million, $40 million will do roughly, I want to say, $200 million in revenue by the end of, I want to say, 2022 or 2023, somewhere around there. That's what Sarah Galletti said. But either way, a great acquisition. This caused a big bottom line loss. And again, that's why the stock dropped. But when I look at this company, I didn't really see anything that negative. Now, when it comes to the Tattooed Chef, we really have to understand that for this company to do very, very well in the future when it comes to actual, stock price, it's gonna have to turn a profit at some point in time. Now, when it comes to the company right now, they're growing massively. I completely understand that they want to spend money on innovation, on marketing, on getting their products out there. But over the long run, over the next couple of years here, we want to see profitability because that minimizes any potential risk when it comes to share dilution, minimizes any risk of bankruptcy, and in addition to that, shows that the business is very, very healthy. So when we look at the Tattooed Chef over the long run, and again, you got to understand the quarter, in my opinion, for over the long run, it's a great quarter, showcasing that they now have the capacity to do roughly $500 million in revenue, which is significantly higher than the 240 they're planning on doing in 2021. Roughly double that. And in addition to that, you don't really have too big of a change when it comes to 2021 guidance. So I think the quarter was actually kind of good, although the stock did drop significantly. Either way, it's recovering now because the market is realizing that, hey, this quarter wasn't as bad as we originally thought. That's why we're rebounding. So when it comes to the actual long run performance of the stock, it's going to be based off of long run, statistics when it comes to revenues, profits, etc. And before we actually take a look at this, let's take a look at their investor presentation from, late 2020 here. And this hasn't changed. They haven't given us any other information from this, but I'm kind of in addition to this. So I'm going to assume this is still correct and management still expects to hit these numbers, but they expect to hit roughly $1 billion in revenue by year 2026. In addition to that, gross margins of over 35%, adjusted EBITDA margins of over 20%, potentially a net income margin of right around 15%, which is massive for the food industry. You don't have many food companies out there with such high margins, but either way, this is what they expect. Now, although no guidance was included in 2021 guidance rather, they did include two acquisitions in their 2026 guidance of $1 billion in revenue. Sarah Galletti did say this, that they've acquired this company, the Foods of New Mexico rather, and they're one small acquisition away from feeling very, very confident at hitting this $1 billion mark in revenue. So she essentially said that here in 2021, one small acquisition away, potentially $10, $20 million, which, hey, they have right around $100 million on their balance sheet, so no reason to potentially dilute shareholders on that front, away from hitting this $1 billion, which is, again, significant revenue growth, and in my opinion, will potentially be beaten by that time frame. Now, when I look at this company, I see massive potential here for the Tattooed Chef to actually hit $1 billion in revenue by 2025, if not actually outperform and hit that even earlier. Now, again, these numbers here, I've kind of filled them in. I do think they had $300 million in revenue in 2022. I think that's significantly lower than what they'll do rather. Again, $600 million in 2023. I think that's somewhat likely. You may see something closer to 550. Either way, these numbers don't matter. All that matters in this situation is potentially this $1 billion, or we'll take a look at some other situations, maybe $1.2 billion in revenue by year 2025. Either way, you look at this 35% gross margins, you add some operating expenses, some taxes, you get potentially a net income margin of roughly 10%, add a 30 price to earnings ratio. They're no doubt a growth company and will continue to be a growth company over the next decade here. And you've got potential price upside of right around a double up. Now, when it comes to what's kind of gone on here, the company expects, or at least says, that they're going to hit EBITDA margins of over 20% by, again, year 2026. if they manage to do this, the potential upside of this company, of the stock, increases massively to a point where you now have a situation where their net income margin is potentially closer to right around 15%, or you see upside of right around a 3x. Now, in addition to that, you look at a more bullish scenario where they continue to outperform maybe $1.1 billion in revenue. You get a 3x over the next 5 years. So when I look at this company, when I look at this stock, I see massive potential for it to be potentially a 2 to 3x over the next 5 years, as long as they manage to focus in on profitability and achieve that on a high level. Now, will they do that? That remains the question here today. Are they going to hit profitability? The biggest question when I have to this company is, are they going to be able to flip from the situation where now they're actually experiencing larger net losses than originally anticipated, to a point where they're one of the most profitable food companies out there? That's what we got to see here over the next 4-5 years. Sam Galletti, again, a veteran in the food industry. He's been in it for decades upon decades of time. So I wouldn't be surprised if these numbers are actually pretty realistic, given that he's got so much experience. He wouldn't just throw out these numbers if he didn't have a plan to hit them. So if they manage to hit these numbers, awesome. If they don't, we could see a bit of a suppressed upside when it comes to the Tattooed Chef, which again leads me to my next point. What am I doing with the Tattooed Chef stock? Am I buying, selling? What is it in my overall portfolio? Well, the Tattooed Chef currently is right around 19% of my overall stock market portfolio. 4% of that is in 2023 options, while right around 15% of that is in actual shares. Now, when I look at the Tattooed Chef and look at what I'm potentially interested in doing with it over the longer run, I'm personally fine with my position. This is something that I've talked about a lot. I'm fine with where my Tattooed Chef position is at this moment in time, and I'm not really interested in adding any shares unless something significant occurs where potentially fundamentals improve massively and the stock price drops significantly. But when you look at more of a long-term chart, let's go to maybe like a 4-hour or maybe the daily chart here, you see this massive wedge that has been forming really since, again, mid-2020, when the stock was just around $12 per share, hit a high of roughly 27 bucks back at the end of September. You've seen this massive wedge here that ends right at the end of 2020, right around the same price that we were trading at just a couple of days ago, just around $19 per share. So when I look at what this company and the stock might do over the coming quarters here, there could be a positioning here where this stock potentially trades a little bit sideways for the next 5-6 months and then breaks out to the upside here after this massive multi-year wedge has completed. So again, this is very exciting stuff here. Bounced off again. You see this here back, this dip that we saw here August, right after this earnings report. We'll see what ends up happening. I'm very excited with this company. We'll see what what I'll end up doing with my portfolio positioning over time. But I'm confident with what I have right now, and we'll see what this company does over time in terms of execution. So, anyways, guys, thank you all so much for watching this video. If you found some value in it, please consider subscribing, and I'll see you all in the next one. Bye bye.